Welcome to another Hobo Talks. On this one, we're going to do a portfolio review. Don't think I've done one of these this month, but I got to tell you, it has been ugly. As you can see here, way back, even though it wasn't that long ago, about February 19th, really looking back a month, a slide started that did not stop. Really, I only recently started to do a little bit of a bounce back, but we lost a ton of value in here. And if you're like me, you were in yield max. Honestly, I don't know if they had any funds that really weren't hit by that recent drop. And unfortunately for me, I had the yield max version of Nvidia, so I felt all of the drops that happened. Like I said, about a month ago, 219, you can see this dropped extremely hard. And Nvidia basically did the same thing. And I think I had close to 75% of my portfolio in that. I'd really locked in on the dollar a month. I wanted, at least $1,000 a month in shares. And that's what I really was rolling with. And it really kind of felt like I was a defender out there trying to stop O2 Shaq. If anybody's been around, they know what I mean. There's nothing I could do. There's nothing you can do but get out the way or get posterized or start to rack up files because you couldn't stop the man. That's how the market was. One thing that's always talked about is when you get into yield max funds, your upside is really capped. So you can see here, this is both charts essentially, and you can see really how they really have a similar type of thing. When this one goes up, this one usually goes up, but at a much lower. And when it drops with it. So see, it's got a very similar type of pattern. But what you also see is when Nvidia goes up past a certain point, even though this goes up with it, it can't really match the slope. So you take all the downside for the most part, but not all of the upside. Actually, I'm going to take that back. You don't always take all the downside as well because of the dividend itself. But overall, if you're just looking for overall performance, it is better to be in the main stock in most cases. So this is my main account. So as you can see, the main difference from let's say last month to this month is I have nuked the Nvidia portion of my portfolio right now. It was dropping, dropping, dropping. I think it was down almost 30%, something like that. And at the time, there was a lot of crypto news that was coming out as far as the government going to go ahead and do a reserve and some stuff like that. So I decided to take a gamble and one to stop the bleeding from Nvidia and to put it into either Cony or Misty. And I went back and forth on this, which one I was going to do. And eventually I decided I would do Cony. And the main reason is Cony at the time was still doing about $1.30 a month. Funny enough, right as soon as I did that, they put out we're going to do like 58 cents as a dividend. So still was able to do my $1,000 a month that I was trying to do, but the goal at the time was to get this to $2,000 a month. And then a month from now, I plan to start to rebuy my Nvidia portion. I'd like to get that back up to 1,000 shares at some point in the future, but still working on some other things. I want to get my SoFi up. Misty, I want to bump it up as well because this has really been a really good one. I think they just paid out their lowest dividend of all time as well. So, like I said, all the yield max funds definitely took a beating. So, looking at this, um, overall, we are still down a decent amount. I still have $2,000 of margin that I'm slowly paying off as these the yield max funds basically do that for me. Not really having to put too much extra into this besides just trying to invest. So that's really where we are right now. Now, the most important thing to most people are the dividends. So as I mentioned a little earlier, Yield Max will actually pay for the margin for me if they can continue to pay out something similar to what they've been doing. So as you can see here, we have $20,000, 526 and 42 cents in margin that's on this account right now. Now there is some interest that gets added in here, so it's not going to be that flat number. You'll end up paying more than that. But the important thing is just looking at Coney by itself. If it can continue to pay about what it's been paying, it will give me $38,000 over this year. So that's going to be about $18,000 difference. Misty, not being a slacker right behind it, is estimated to do about 4 grand. And then I have Jep Q and Pendleton Floating also in here, giving another $300. So these positions together, if they can basically maintain over the year about what they've been doing, same kind of about $1 for Coney. Misty's been doing really about $2. I would average. Jep Q's been doing about 50 cents, and Pendleton's been doing about 10 cents. So if those can kind of keep doing what they've been doing, in 1 year's time, that margin should be completely paid off. And then that margin at that point is just stocks. They're just stocks in my account. Don't have to pay it back. And all the margin or all the dividends you get from it, you can just keep. You can keep it invested into other things. So as a total currently, this portfolio is estimated to do about $42,000 over the year. That's not bad. That's not bad. That's off of a portfolio that technically needs to combine these together. So that's $36,000, $37,000. So in 1 year's time, theoretically, I can double this portfolio. To anybody still watching the video, I am curious. Did you get wrecked in the latest pullback? Do you think this is just a correction? Do you think things would shoot up? I mean, honestly, if you look at the S&P over the last, I don't even know, 30 years or so, these kind of pullbacks do happen from time to time, and things only jump back and go higher and higher and higher. You do wonder if there is a stop. Is there a top to this? If we go to war, I think that would totally destroy a lot of people's portfolios, things like that. So just curious what you think. In case you didn't know, I's a hobo. Thanks for watching.